Welcome back to the channel. I hope you're having an amazing day wherever you are around this beautiful planet of ours. Hope you got a sweat on, ate some fantastic food, and spent some time with loved ones. Let's get into the danger levels for this weekend on Bitcoin cryptocurrencies. The ETH merge dump sell the news event is almost confirmed as a sell the news event, something that we've been following very, very closely here on the channel. So make sure you are subscribed, bell notification icon, and of course, like the video up. And if you want to save it till the end, I'll remind you again at the end of the video. All right, guys, we have Bitcoin to get through, then ETH, and the total cryptocurrency markets, as I'm seeing some strong weakness in the medium to macro. Short term, maybe we see a bounce. I just want to give a quick shout out. I'm here in Phuket and I'm doing a meetup tomorrow, the 17th, Saturday, the 17th in the afternoon. If you want to join me, check it out here. Subscribe to the newsletter, name, email address, jot those details through. And also there's a link down there for the Eventbrite. There's just a few tickets left. It's a small meetup talking economics, crypto cycles, and of course how we can best prepare for the upcoming bull market. All right, we're not going to sit around talking shit about football. Not my interest whatsoever. All right, danger zones here. 19.5K is the level that we are currently holding. By the time I release this, possibly we go through that level. The main thing with that is it is only a short-term support level. And if we were trading it just short term, then at least you can keep your stops close, meaning you'd put your stops underneath all of this zone here. Maybe they get run and the market bounces back up, but at least it's a close signal there. So that's why if people are wondering, well, who cares if it's a short term? That's how you would trade it on a short term trade. You've got the stops down below and above. Now going a little bit longer term here, just to the few days, the danger sign is if we do get a bounce from this point. It's a clear support level. We've been holding out here for many hours at this point. 20,700 is the next key level. This has been on the chart for months now, going on 3 months. It has been a key level for Bitcoin to overcome, and we continue to gyrate between the teens and the mid-20s, and 20,700 is that key level. So if we can start to overcome that again and the 21,200 level, then again we go for that test to the upside. You know, this has really held the market up, that 20,700. So to the upside, the danger is that we get a rejection start to form here, 20,700 to 21.2, and we start to wane again. We start to drop back. That for me would not be a buy the dip opportunity if I saw that happen. It is really starting to wear thin, meaning the lows are probably going to get taken out. No guarantees, but if you do see a rejection around this point over the weekend, then we're probably looking for further downside. Now, of course, if we just break down from this point, 18.6 is the next level, and then that final low at 17.5. So I think there are still a few more danger pieces to come up here. We weren't able to make 50% and hold it for very long. We never got to the Wyckoff bullish flip, so there's still a lot of downside action. What is some nice positive news here if we can call upside positive? Maybe we're already set in our positions. Well, if this isn't going to be a rejection at 21.1 or 21.2, then we have the bear market downtrend to overcome. We are so close to this thing. We are smelling it, and we could almost break out of it probably over the next week or two. That's what I'm waiting for here, for the signal that the market is slowing, and obviously the turns are coming. Bears to bulls. It's going to happen, just when is the question. Now, just over the last 24 hours, we had another little touch into the cycle buy zone. So if you are DCAing, that's in my macro cycle buy zones here, back to under $20,000. Basically, anything under that I really do like. And the cycle buy zone go all the way down to about $11,500. So nice, good range there. I think we still have months to go at this point. We will know if the time is up once we start to break some of these major swing tops. A break above the bear market downtrend is going to be our next signal for strength in the flippening from bears to bulls. As for ETH, the merge has basically been a flop for investors. Total and utter flop. This is confirmed now on the chart for ETH. Well, we're basically on that confirmation. We break 1420, then danger is 1300. June and July, breakdown, much higher danger at 1,000, to then go back to lower prices underneath that current low of $880. That would then bring us much, much further down, and we could be looking anywhere from 6 to 400 I'm not even going to go there right now because we're a long way from that point and people will only hear 400, but I'm not saying that whatsoever. 880 is that current bottom, and at this point, 1420, if we don't hold this 1455, which is our key 50% level, remember we had this on the chart since the peak, because this is our 50%, then we've got that 1420. And I think probably over the next coming days to a week or two, we will come back to this 1300, and it's going to give us more opportunities for DCAing into ETH, provided we continue to watch ETH BTC. Last thing I want to point out here is the hype. If you've made it this far, you've beaten the merge hype. If you have not given in to buying ETH, you've beaten the merge hype. You can basically tap yourself on the back and say that you are basically a seasoned crypto trader because you did not give in to that market sentiment. ETH, BTC, hopium. ETH is cooling off. Congratulations, you did not buy the merge. FOMO, okay? So you didn't get into that FOMO. Big round of applause for you guys if you were able to prevent yourself from buying this crap. And the crap being the market sentiment of the merge hype. People getting so caught up in it, it's absolutely ridiculous. All right, so the swing bottom here at 7.2% is basically the trend flipping. So we're going from up to uncertain. You can see the trend is currently up, and if you want to get a hold of this, it's the TIA Gann swing indicator. There's a link in the video description if you want to get a hold of this. Basically tells you what the trend is. Once this breaks down, this would then flip from up to uncertain, and our next support's at 6.7%. If ETH can hold that, ETH BTC, then we have that next sign of strength to try and tackle the 8% level again. And this is all going back towards that ETH flipping BTC. We're not there yet. It is holding relatively good ground on the macro frame here on the weekly, but I think there's still a little bit more time to go for ETH. So if you get some downside on ETH BTC, get some downside on ETH USD, then you're basically buying a good low level. But the saying is basically buy low, sell high. So that's what we want to see. We want to see these things come down and then hold up the macro support, the bigger picture stuff here. And that is 5.2%. Now I've got a couple of percentages here on the chart. 36% down for this range, 27.5% down from the peak to the bottom. Remember, this is our macro resistance, which we were expecting ETH to hit on, get knocked back, almost there. Resistance will be confirmed once 7.2% is broken. The next level down here is 33%. Okay, so what would we see if ETH was to repeat any one of these three scenarios? So from the top down to about 27% would lead us at 6.2%, down to 36% would be a 5.4% ETH BTC valuation. So that's down here. And that would still line us up with strength overall because it hasn't broken the 50%, hasn't broken the higher swing low bottom here. So it's still a relatively strong position in a broader sense. And that would then bring potentially the ETH USD price down a little bit, provided Bitcoin is also at a stable level, current prices. One more range we want to have a look at is the entire range here. So this is from the peak down to this current low in June. That's 44%. Now, it is almost likely that we'll put in a lower top, provided this thing holds up, then we won't put one in. But if this starts to break down, if ETH BTC breaks down past 7.2%, then it's going to be a lower top here. So if we look down to 44%, that is going to just slightly break the previous low and the 50% level. So it's going to come down to what happens on the weekly. Does it just wick down, close back above the 50%, or does it close under that? And that would probably set us up for a further downside. A little way away at this point, but it's just something to keep in mind, especially if we're trying to set our positions for DCAing into Ethereum, especially if Bitcoin happens to hold its ground. Next, let's take a look at the total cryptocurrency market caps, excluding Bitcoin and Ethereum. This is giving us the proxy to all of the altcoins. We need to look at the support and resistance levels because there is still a lot of talk about dollar cost averaging into altcoins. And so far, it has proven absolutely terrible for DCAing into altcoins for the long term. The DCAing meaning, let's buy all these dips on the way down. There's a big one here where the sign of the pumps is just getting less and less. You got a 250 odd billion from the low to the high move up, and the current move from the June low to the peak that we just had a few weeks ago is only about 120, 130 billion dollar move. So half what it was able to do during February, March, and into that peak into April. This means there is still not the interest from big money coming in to buy altcoins. It's not time yet, and the facts are right there in the chart. The pumps are just not there yet. That could all turn around, but for now, the market is just not liking altcoins at this point. So we're at the support level here of 360 billion. Now, I think this is going to break down, whether it's this weekend or the next coming weeks. Either way, I want to be prepared for it this weekend because we just haven't seen the follow through. 360, next level, danger level 340 billion. And should that break down, of course, the current low at the moment is 320 billion. Now, some goodness there, some hopium, is that we will be getting ready, we'll be getting set for that next big position very, very soon. This for me is the critical level. The zone between 100 and 200 billion, it's going to depend on how much is still in stable coins at that point. But if we're looking at it between 200 and 300 billion, for me, this would be the get ready stage. There is enough wiped out on altcoins to get us excited for building those positions longer term. So let's see what happens over the next, over this weekend, whether we actually do get any sort of bounce from this low at 360 billion to try and get back to that bear market downtrend. We're a long way from that, whether we hold up and start to move higher again. But I think over the next coming months, we'll probably see some further downside. So I'm still not there, but it's getting closer. So get ready. The downside is your best friend. The key signal here over the weekend is if the market bounces to around 380 billion and then gets rejected. That's probably going to lead to a breakdown of 360 and eventually hitting that 340 billion. So they're going to be your short-term signals for that more macro play. Keep those levels in mind, especially if you're looking to dollar cost average into other cryptos, Solana, Matic, anything like that, ADA. So keep that in mind. Now, if you're back onto the short-term trading of Bitcoin, go and check out this video. I'll leave a link to it in the video description. It's Michael's channel, my brother over there. Go leave him a little bit of a hi. If you do, go over and subscribe to his channel. He's going through the short-term analysis for Bitcoin trading and Ethereum, and also some of the other major alts. So great channel to follow, if I don't say so myself, being my brother there. But yeah, if you do want to learn more about trading, go and check out Michael's channel, subscribe to it, like it, leave a little comment down here. I'll see you guys at the next video. Reminder, there's 0% fees on all spot pairs for Bybit, and also there is MEXC Global for everyone down there. If you're a US citizen, can't use Bybit, but for MEXC, open to everyone. So check it out, 0% maker fees down below. Like, subscribe. That's your second and final reminder. I'll see you guys at the next video. Have a fantastic weekend, or maybe I'll see you in Phuket tomorrow. Until then, peace out.